Hi there, my name is Sam Glidden, and on behalf of my team members Shu Han, Yifan Hugh, Nikki Roy, and Thomas Burke, I would like to welcome you. Today I will be discussing our Burkenroad report, in which we covered PetroQuest, a small-cap E&P company. I am going to begin the presentation by giving you a brief overview of the company. Next I am going to discuss their strategy, eventually touching upon some financial strengths, and ending with our investment thesis and recommendation. PetroQuest is a small-cap exploration and production company with a $441 million market cap. The company is headquartered in Lafayette, Louisiana. PetroQuest's primary strategy hinges upon new acquisitions and joint ventures. The company is currently 75% gas, but plans to get oilier in 2012. A recent success of PetroQuest has been its La Cantera play. Located along the Gulf Coast, La Cantera promises increased cash flows for PetroQuest. The company plans on expanding its activity within this play to help fund other projects. One of these projects is the Mississippian Lime play. Located in Oklahoma, PetroQuest Mississippian Lime holding is expected to be mostly liquid, with wells coming online in the fourth quarter of 2011. Also bolstering PetroQuest's revenue is the company's Woodford operation. In the third quarter of 2011, the company acquired Western Woodford acreage, which is expected to increase PetroQuest's liquid production. Furthermore, in an effort to reduce risk, PetroQuest established a joint venture with NextEra, a $24 billion utility company. This partnership began in the Woodford play and is expected to continue to other areas of operation. As you can see, this map details the areas where PetroQuest owns acreage. The company operates primarily onshore, but still utilizes its offshore properties to provide a consistent revenue stream to fund its new ventures. PetroQuest competitors include Chesapeake Energy, Goodrich Petroleum, Newfield Exploration Company, and Abraxas Petroleum. PetroQuest's ROA and ROE rank superior to its competitors and rest well above industry averages. These ratios indicate PetroQuest's efficiency in asset management. Another strength of PetroQuest, compared to its competitors, is its relatively low debt-to-equity ratio of 1.11. PetroQuest's low debt-to-equity ratio indicates the company has low leverage in its operations. We chose these competitors because each has a similar market cap and a geographic proximity of operation to PetroQuest. As hopefully understood by now, PetroQuest's three main products are oil, natural gas, and natural gas liquids. PetroQuest believes that if either gas or oil prices remain strong, the company will not face any liquidity issues. An environmental issue, however, that PetroQuest might face is the issue of fracking. The company has yet to encounter major problems in the fracking process, but it is still an issue that it might have to deal with in the future. The Federal Energy Regulatory Committee has strict regulatory laws that PetroQuest must abide by. After the Deepwater Horizon oil spill, the U.S. Department of Interior increased the liability of BP and added a variety of safety and environmental regulations. PetroQuest must apply for permits to drill for all of its wells, and when the wells are abandoned, the company has to follow strict regulations for how to restore the drill site. Another possible risk for PetroQuest is its hedging activity. Since 2008, PetroQuest has conducted hedging activities to protect against commodity price volatility. For example, in 2009, the company increased its revenue by $79.9 million due to hedging, whereas in 2008, the company lost $8.3 million because of hedging. Some other potential hedging risks that may occur include the counterparty defaulting on the payment of the hedge, or the hedge price simply not being followed by the counterparty. In 2012, PetroQuest hedged approximately 25% of its production. Continuing our discussion of financial activities, we move on to our projection of cash flows, which last until 2020. PetroQuest has been trying to increase its flexibility and liquidity by creating new programs since 2010. With the production in the Mississippian Lime coming online in 2012 and the Woodford joint venture generating significant liquidity, we projected large production cash flows. In 2012, we projected cash flows to be approximately $2.47 million and increasing to $7.94 million in 2014. However, in 2017, cash flows dipped to negative $2.5 million, due in large part to a major debt payment at the time. However, after 2017, the cash flow will quickly bounce back to $19 million. Our projections are based on crude oil ranging between $88 and $108 per barrel for the next 10 years. These cash flows are heavily dependent upon crude oil and natural gas prices. PetroQuest is trying to maintain a conservative balance sheet by having capital expenditure be within or close to cash flows. Keeping these future cash flows in mind, we move on to our valuation. To value PetroQuest, we use three major methodologies to develop a 12-month target price. The methods used were net asset value for both 3-year and 5-year horizons, enterprise value to prove reserves, and enterprise value to production. We reached our 12-month target price of $8 by equally weighting the results of these methods. For our analysis, both proved reserves and production levels were accounted for based off of our numbers from our model. Our team rates PetroQuest a market outperform, and we believe the stock price will be $8 in 12 months and the implied rate of return will be 21.89%. As addressed prior in this presentation, we believe that PetroQuest La Cantera play will generate significant future production. Not only does PetroQuest already have a significant position in La Cantera, it is expanding its position in the area through a new joint venture. A shining example of PetroQuest's joint venture abilities is its operations in the Woodford Shale. In May 2010, the company entered into a joint venture with NextEra, giving NextEra the right to 50% of PetroQuest's undeveloped Woodford acreage. Because of the joint venture's promotional structure, PetroQuest is only responsible for 20% of all drilling costs, and the company will receive half of the revenues. In 2011, the company grew its Woodford production by 20%. Initially, Woodford well production rates averaged 5.2 mmcf per day. The success of the Woodford joint venture has led both PetroQuest and NextEra to enter a new joint venture in Oklahoma's Mississippian Lime. Although the Mississippian Lime has not come online yet, management expects drilling to begin in the fourth quarter of 2011. In the meantime, PetroQuest will continue to sponsor its onshore activity with its offshore operations. Based on our valuation of PetroQuest, we assign the company an outperform rating. We are bullish on the new acquisitions and confident in PetroQuest's upside potential. On behalf of my team, the A.B. Freeman School of Business, and Tulane University, I hope you enjoyed our presentation, and thank you for watching.